Hi traders, Luke Suddards here, market analyst at Pepperstone, coming at you live from London. So this video series, a new video series we just launched, is going to be called Technical Tuesdays, whereby every Tuesday I'll take you through all the key global macro asset classes, ranging from FX, commodities, indices, and to Bitcoin. So all the traders' favorites will be covered, and let's get cracking, let's get stuck in. So first chart I'm going to start us off with is the US dollar index. Now, I think it's the building blocks and basically the foundations for the house to any analysis that someone wants to be doing from a global macro perspective. So this is basically the reason why I'm beginning with the dollar. Now, before we get onto the price action, it is worth noting that we do have some key economic data coming out. Later today, we've got retail sales, which is forecast to see a decline. If we get a positive month-on-month number, it could help the dollar find a bid and retrace some of that weakness we saw on Friday as a result of the soft consumer confidence. However, if we look at credit card spending of late, some are saying we could see quite a big miss, and that could put a tiny bit of pressure on the dollar. We'll also hear from Jerome Powell later this evening, followed by the Federal Open Market Committee minutes tomorrow. Now, what both these events should provide is insights around appropriate timing as well as the pace of tapering favored by Fed officials. This also comes, after a report on Monday morning from the Wall Street Journal that the Fed is weighing ending the taper by mid-2022. We'll have to see if that is reflected by Jerome Powell too. And then on Thursday, we get some more jobless claims data with a forecast for initial claims to fall 10K from 375K last week. So let's take a quick look at the charts. So we've seen that price is basically, it's come out of that ascending channel. It sliced through it back there in early August. It retraced back up. Back into the ascending channel, and now it's back below it again, finding some support from the 21-day exponential moving average. These are daily charts for anybody wondering. The price is coming up to a bit of resistance at the moment at around 92.8, and I think in terms of upside targets, I'd be looking for price to get back up to 93.2 on bullish price action, and then higher than that, 93.4, the 31st of March high that we saw earlier this year. One thing that does concern me slightly is there is a tiny bit of negative divergence happening where we're seeing the RSI momentum indicator making lower highs, whereby price is making higher highs. That's one thing for the bulls to be mindful of. I do like that we've got a golden cross. The 50-day simple moving average is above the 200-day simple moving average. On the downside, if price was to retrace, I'd be looking at the 50-day simple moving average for support, which is around 92.17, and the 91.9, 92 horizontal support level there. Moving on to the single currency, Euro US dollar. Again, before we get cracking on the technical analysis, there's a couple things I should mention. So we'll get the second estimate of Euro area GDP growth today. And then tomorrow we'll have the Euro area will release its final estimate of inflation data, where a chunky reading could get the hawks on the ECB a little bit jumpy. Now, the RSI, I've drawn in this line here, and what it shows is that previous price rallies that we saw within this descending channel were being capped around the 52 mark. And right now, this 21-day exponential moving average, which I really recommend adding to your charts, is providing a great form of dynamic resistance. We've also got the 118.5 level horizontal resistance, as well as the upper trend line of the descending channel and the 50-day simple moving average, which will probably add a bit more resistance to price action to the upside. We've also got the 200-day simple moving average, which the 50-day cross below, making that dreaded death cross. On the downside, we've got that 117 support, which we saw was present around the 30th of March too. Below that, we got 116. If I zoom out from the chart, we can see that that was a bit of a double bottom support back there last year around the end of September and early November. So those would be the sort of key levels I'd be watching for the Euro US dollar. Moving on to cable, the pound dollar. Again, let's mention some of the key. It's a big data week for the pound, which will test the BOE BOE's current optimism. We had a good employment gain this morning of 95k versus a 75k consensus. The unemployment rate dropped to 4.7% versus 4.8% expected. Tomorrow we'll get inflation data with the headline rate expected to come in above target of 2.3% year on year. The Bank of England have said at their latest meeting that some modest tightening of monetary policy is likely to be necessary in order to meet the inflation target. So that's why these inflation numbers, successive inflation numbers, are going to be key in terms of driving the Bank of England's policy goals, as well as obviously how the labour market reacts when that furlough is unwound at the end of September. And we'll get retail sales data out on Friday. So cable, it's been quite range bound. It's trapped between its 50-day simple moving average and its 200-day simple moving average. And this is the 50-day simple moving average is edging slightly lower and coming quite close to this 200-day simple moving average. And for bulls, I'd not want that to happen, that dreaded death cross. Again, drawn in another RSI line at 53.66 to try and mark the previous price rallies where it's found a bit of resistance. The key levels to watch here, the 1.366 level, double bottom back in early 2021. The 138.5 level, which it's at currently, it's basically 50 pips off at the moment. And then we've got the 140 level and the 141 level higher up, and further than that we've got 142. But we do look like we're in quite a broad range between 142.4 and 136.6 since the beginning of this year in Feb. Moving on to EURGBP, which saw an absolutely massive move today on I don't know what, to be honest with you. Maybe some stops, shorts, which triggered, and it just accelerated the move higher as price moved through the 0.85 resistance, as well as the 21-day exponential moving average. It came right back up to tag that upper trend line of the descending channel we've seen, and just above that we've obviously got the 50-day simple moving average. I drew this little range for the RSI because ever since it moved in here in about May, it's been trapped in this little range. It's right at the top of that now, so maybe we might see sellers come back in and push price lower, and watch for moves heading to 0.85 and lower than that 0.845, and below that obviously 0.84, which was the which was basically, if we go back to end of December, if we see a really aggressive move and a divergence of policy between the ECB and BOE widen up even further, we could see moves back to these lows at about 0.83. I'm bearish on EURGBP. I like shorting rallies. I think that's the right sort of approach to take here. But yeah, very interesting price action we saw today. Then moving on to the US dollar JPY, again, another range given how US 10-year yields have been moving. A lot lower today, which is quite surprising that we haven't seen this range support potentially break. But I think maybe we're seeing some risk-off behavior given what's happening in New Zealand dollar and Aussie dollar, which I'll get to soon with COVID and lockdowns. This is a key level of support, this range support. Below that, in terms of support levels, price levels to watch out for, there's not really much. We have a bit here at about 108.49, and then below that it's at the 200-day moving average of 107.45. Rallies, we should get to about here first, see how we do, how price contends with the 50-day simple moving average and 21-day exponential moving average. Above that, we've obviously got the range resistance at 110.8, 111 area. RSI is fluctuating around this 46 level, but in no man's land at the moment. Australian dollar took a bit of a hit this morning, as basically, we got the minutes out last night where some members were thinking about delaying the tapering, and that obviously hit the currency. And we've got Aussie employment data out on Thursday. It's expected to see a shrinking in job gains and a tick up in the employment rate to 5%. So we'll have to see how that pans out. Key levels, this support at 0.73, which is currently being breached. Below there, we'll probably see moves being supported a little bit at 0.722. We've seen a death cross, again, not great for Aussie bulls, Aussie US dollar bulls. The RSI is bumbling around in no man's land. Bit of negative divergence there, RSI making higher lows and price sort of making lower lows. For now, the 21-day exponential moving average providing a bit of dynamic resistance there. Moving on to the New Zealand dollar US dollar, which saw an absolutely massive bearish candle today, and that was on the basis of Jacinda Ardern implementing a 3-day snap lockdown on the basis of a single COVID case. And we saw the money market start to price out their certainty with regards to tomorrow's Reserve Bank meeting in terms of a 25 basis point hike. And I think that is the big question now. Does the RBNZ stick to 25 basis point hike, or do they actually stand pat and not do anything? I think we'd see quite a bit of weakness, and maybe some stops would be triggered here, and we could see moves down to as low as 0.68. That would be my first support level to monitor. We have seen a death cross, not great. The RSI was making negative divergence, higher lows, lower lows on the price, which sort of stopped a bit of the selling momentum, but there's a lot of resistance here for the New Zealand dollar to contend with. And the one other thing I don't like is this looks like a bit of a descending flat-sided triangle shape, and typically they tend to break to the downside as they're making a series of lower highs and basically horizontal lows, essentially, not much movement on the lows. So yeah, interesting one to watch, especially with the New Zealand Reserve Bank of New Zealand meeting tomorrow. In terms of the cross here, we've seen a massive bullish candle. It's up 76 basis points on the day, right off those lows of 1042. Interesting again, as I say, the 21-day exponential moving average has come and given a bit of resistance as price surged higher. Death cross here, bit of negative divergence, RSI making higher lows while price is making lower lows. There is a head and shoulders pattern here too. There's the left shoulder, there's the head, and there's the right shoulder. It broke through that range support at 106. And the head and shoulders pattern target projects down to about 102.50. We'd first have to take out this 1st of December low at about 104.2 if we were to move lower down to 102.50. And if New Zealand can weather the storm with the COVID flare up, we could see parity reached again, especially if the Aussie dollar continues with the lockdown being extended now in Melbourne and a curfew being put in place. This was my concern, though, with the New Zealand Kiwi, that, given the steep money market curve, with all the interest rates being priced in by the market, that there was this sort of risk of a violent repricing lower on the curve due to the fact that New Zealand has quite a low vaccination rate and Delta is just very contagious. So that was my concern. And it was a bit of a consensus trade, bullish, and with those types of consensus trades, you can get unwind risks. So I think we've seen a bit of that today, a bit of steam coming out of this bullish consensus trading. Moving on to the commodity space, gold's doing really well at the moment. It's the real yields have been ticking lower as we've seen those US 10-year yields move lower. And that's rocket fuel for gold because it's a yieldless asset, and when yields move lower, people move back into gold as, from an opportunity cost basis, it becomes an alternative viable investment. Now, on the charts, we're reaching very interesting levels. We're back up here at 1.8 basically in terms of resistance. The 50-day simple moving average is right there. We've got the 200-day slightly above it at $1,812. We have seen a bit of a death cross, but it's very minor, so we'll have to see. The RSI is also back up at the 55 level resistance where previous price rallies have peaked. We saw there a bit of a double top pattern just above the 55 level. And if we slice through that 1.8, I'd be looking at the 200-day simple moving average and then the 1.830 horizontal resistance. Below that, I'd like to look for the 21-day exponential moving average and 1.750 support. Oil, also an interesting space. We had, Joe Biden, the president of the United States, asking OPEC to increase production because gasoline prices were hitting his voter base in the US, and OPEC basically sent his call straight to voicemail and said, well, we're not going to increase production. We think our current outlook of 400,000 barrels starting in August to basically allow that 5.8 million barrels back onto the market is what we want to do. China growth, we saw some big misses in their retail sales and manufacturing output. That also weakened a bit because of the Delta situation over there. That also caused a bit of weakness in crude. This is a very key support level around $68. Need to monitor that. We've seen a bearish cross from the 21-day exponential moving average below the 50-day simple moving average. This is capping price upside at the moment. $72 is also key in terms of resistance levels to monitor. The RSI is bumbling around the 40 level, but in no man's land. And yeah, there's not really much more to say about oil. We'll have to look for the inventory data coming out on Wednesday and Thursday and monitor the dollar strength after these FOMC minutes, given that oil's price in dollars, that could cause a bit of weakness. If situations in New Zealand deteriorates more and we get longer lockdowns, that could also put pressure on the demand outlook for oil and cause further weakness. Another chart I want to put on your radar is the FTSE index in the UK. Now, I've zoomed out a bit here, and I'm looking around the 2019 range support at 7,250, and that's where price is basically bumbling up against right now. We saw there back in June as well as now in August. It's right up against that 7,250 level. It's been in this beautiful ascending channel with price being bought on, with dips being bought as price retraces back lower to the 50-day simple moving average, as well as the lower trend line of the ascending channel. There is a tad bit of negative divergence here. RSI is making lower highs and price is making higher highs, which does concern me slightly because divergence is quite effective. But if we do breach the 7,250 overhead resistance, we could see price get back up to 7.5. And things are moving in the right direction in the UK, you know, with the level of vaccinations we've seen, it's high. And for now, they seem to be effective in reducing hospitalizations, and cases have been declining, case growth, and the economy's reopening. There's that confidence coming back. People are going to the pub, they're drinking pints. I know I am. I'm excited to be back. So yeah, interesting one on the FTSE. Obviously, a weaker pound will additionally help their multinational exporters' revenue when they convert it back into pounds and could drive the FTSE higher. Lastly, I'm going to finish off on Bitcoin. It's had a tremendous rally off this 30k range support all the way back up to 47k. It's hovering just above its 200-day simple moving average at the moment, and it's got a bit of overhead resistance from 49.2k, which was former range support back in earlier this year. Tiny bit of negative divergence on the RSI, lower highs, higher highs on price. In terms of any pullbacks, I'd monitor the 21-day exponential moving average and the former range resistance, which could become range support at 41k basically, or 40.8k. Lower than that, we've got the 38k as well as the 50-day simple moving average to provide some support. Can't really see any catalysts at the moment for Bitcoin. If the risk sentiment soured a bit, I think that might hurt Bitcoin a bit, given that it's got a high sensitivity to risk sentiment, and we could see a move lower. But in terms of idiosyncratic Bitcoin catalysts, I can't see anything on the rise at the moment. That's it for today. I hope you found it useful and you've enjoyed my analysis. And yeah, I look forward to seeing everyone next Tuesday. Thanks for joining.